Yo, what's up guys? Welcome back to Trading with Emotions. This is going to be a short video. I just kind of want to go over the implied volatility of AMC, GameStop. You know, I've mentioned this before that with cycles, the option chain has everything to do with how we move, how these hedge funds are manipulating the price action using the leverage of options. So here is the AMC chart. I want to show you guys an example of this hedging, right? So when we were on this pennant, okay, for a little while, they brought the price action up to a favorable level that works with fibs, that works with the option chain that was previously opened, right? Because we did not have these $70 contracts, these $77 contracts open until the run here in May, right? We only had the $40 contracts open back here. And then they eventually brought the price up to 77, opened up contracts, but then kept premiums, the high premiums that they sold, to retail other longs and use that capital to hedge their position. The average price they kept the pennant at here until November when they shorted us back down to 15, they kept it at what? $40, okay? Now when going lower here, okay, they needed to hedge, okay, for a different price level. Why? Because of the leaps. All right, so here's the AMC volatility chart on the bottom, and I'm going to come back to this, but we want to go over these this magnetic parallel channel that we have here and why this is important. These are separated every year, right? So we got the first year here starting in February. This is the second, right? A year apart, February, and here's the third. Okay, February. These are all a year apart. And what did they do? They kept the price action on this trend line. This trend line that is going up has a resistance and support that is being respected as this thing climbs. Okay, that's why back here you're dealing with $5, right? Here you're dealing with $10, and here you're dealing with like 15, 20. So it like doubles every time. And that is part of the hedging, right? But in between, what you have is, well, you have a period of the price either being pumped or dumped, okay? And that's part of the strategy that they have here. They'll pump it for a bit, and then they'll gravitate the price back down when they finish off that technical setup. That's why it's important, guys, to track technicals. And I know a lot of you say that technicals don't mean anything, but to a certain degree, you're correct. But they mean something when these guys are trying to come up with these psychological technical levels that they're trying to trick you with, right? So if there's a pennant here, a bullish pennant, this is where it gets, think about it from a psychological perspective. Everybody would think this play is bullish, right? This is a nice pennant here, and we're going to break up, right? But the complete opposite happened. So this is the thing with patterns and charts, is that something that you find now could potentially turn into something else in the future, right? It doesn't have to turn into a bullish pennant. This could be something else, right? On the monthly chart, we see that this is a macro projector pattern, okay? And that's the game here, guys. And this is why the price is very vulnerable right now, and we're expected to go up in the short term, is because, well, they've been shorting the price down for a while, and I think that the tables are about to turn, right? So it's very important to track things, not with one scenario in mind, but multiple, depending on the time frame that you're in. So back to this whole implied volatility thing, we're going to be looking at GameStops because that's the one that's kind of relevant here. You have the volatility increasing down here, but you also have it increasing up here. We've seen this happen before, okay, where the volatility goes up and comes back down before making that rip, right? So it makes a sort of projector here on the volatility chart. If we take a look at this range here and how long it took from a fib perspective, okay, let's look at fibs. All right, so this is a fib time zone chart here, and I'm placing this on top of the volatility. We actually started to see the cycle begin its form right on that COVID crash. So that's when we're going to start this fib time zone. So we got one here, we got one here, okay, and that third fib, okay, and look at this, guys. There's an increase in volatility right here when we got shorted in November, okay? That's big as well. It's lining up with the fib levels. The third one would happen around that October time. And that's why I believe that if we don't get an increase in price action in July, the next level would be around October. This is another way to sort of, confirm these points of interest and why they happen on these time frames, okay? So peak to peak is actually, and this is where it's crazy, peak to peak does land around that October time. So imagine peaking on that October 13th. So I'm not making it price target or anything. These are just points of interest that signal for runs to happen, right? Or short attacks to happen, either way. But we are seeing this nice curve, okay, in volatility, meaning it's increasing, and the price action is also increasing, okay? So after being at this low, I do see the price action going up again, guys, all right? This is AMC's volatility, okay? So it's a little bit different. So we got 1, 2, 3, okay? And again, it's curling up just like GameStop's. Late July, August would be that first point of interest for this thing to go back up. If that's not the case, then we do have early October, right? All right, guys. I will be on stream tomorrow. We're getting back into it, and things are really, really, interesting in the market. So we'll see what goes down. I'll see you on stream. Peace out. Love you. Bye-bye.